Good morning, everybody. You're watching SmallCapSteve Live. Today we've got Curt Marvis. Big news at Q Media. Pretty excited to have Curt on. Hear sort of what's driving Q Media's ratings. Just found that out this morning. A very pleasant surprise. Later on in the show, we're going to get into some of the small cap news that we always get into. I want to talk about Aberdeen for a minute. A stock that is getting into the hydrogen and ammonia game, which is pretty interesting. So buckle up. We got a big Friday show for you. Let's get started. Curt Marvis, thanks for joining us today.
Hey, Steve, how are you? Good to see you guys.
I
like that opening, by the way. It reminds me of Good Morning Vietnam.
You're the one guy we have on that I get a little bit self-conscious because you've got a history, obviously one of the big drivers behind MTV in the early days, and obviously what's happening with Q Media now. And it's kind of funny, but before you got on in the pre-interview, I was talking to Jay. I said I was actually on the bid on Q Media this morning based on the news, and I actually like this stock a lot more at 33 cents than I did at 5 cents. If I'm being honest with you, and you knew that I always voice my skepticism. Yep. It's clear that you guys are executing. So Curt, let's get into it. What's the big news you guys just put out? What can you tell us?
Yeah, in the TV business, which is the foundation, as you know, for the brand that we're building and the business we're building there, what are called BARC ratings, which is their Nielsen ratings, are critical. I mean, I've said to people, BARC ratings, or AKA Nielsen ratings there, I mean, you can see it in the graph that you've got up on the screen. I mean, this is the growth that we've experienced in 7 months. I mean, this is extraordinary. I don't have to overhype anything and talk about what is going to happen. You can see what is happening. And what does this really mean? What does this all boil down to? Well, ratings directly generate revenue. It's that simple. Ratings equal revenue. Now, the thing that I keep talking to people about that's a little frustrating on my side, because it's like it doesn't happen the next day. In other words, when we announced this morning, it's not as if $1 million comes in the door on Saturday morning. It doesn't work that way. And there's always a lag behind getting the rating, going to the agencies, getting the brands on board, running the ads, recognizing those ads, and then posting the revenue associated with that. Some of this happens relatively quickly, or not quite immediately, but relatively quickly. But most of the stuff that you see that's happening in our ratings today really shows up, 90 days from now, 3 months from now, and is recognized in the next quarter. With all that said, it is a rocket ship right now. There's no other word to explain it. And it's almost like I was talking to a friend of mine. You mentioned the music industry days. I was talking to a friend of mine from the music industry days. I said, when a band comes out and has a #1 hit record, even if it's unexpected that it's going to shoot to the top and be a #1 hit record, all the money doesn't happen that instance when that single track goes to #1. It's everything behind it. It's the album sales. It's the t-shirt sales. It's the concert sales. It's the sales of the catalog. It's all the value that's pushed by that one event that happens and everything that comes after it. We're in a similar situation. The halo effect of this, in terms of the immediate short-term revenue, yeah, that's there. But the longer-term revenue, the brand building, the ability to push this for more viewership in the digital spaces that we're in, all of this stuff is happening simultaneously. And so, we put out a press release 7 months ago when we crested one GRP, because most of the channels that are in India that are on television, the majority of them are 1, 2, 3, 4 GRP. We talked a lot about passing Zoom and MTV and Bindos. These are owned by Viacom, Times of India, Disney. Well, we've blown past those. Their rating points are 6, 5, 6, 7, maybe 8. We landed last week at 46. I mean, this stuff, or 43 rather. What is? I don't even know what it is. I've forgotten. Is it Is it? It's 46.32. So
46.3. Yeah.
yeah, 46.32. Sorry, I've been up most of the night with this stuff. The bottom line is that this is a massive growth spurt that puts us into a whole new range of comp channels. And those comp channels are the mass market big brands in India. I mean, I did a recording with somebody a week ago when we hit 13 on April 9th, talking about how we were chasing a major family-oriented mass channel called Big Magic in India. Well, guess what? Last week, we blew past them. We blew past Big Magic. I think Big Magic last week was like 29 or 30 GRP, and we're at 46. So, I mean, it's an incredible surge in viewership. Are we going to hold every single person? I don't know. Maybe next week it'll go up. Maybe it'll drift down a little bit. But when you reach these kinds of numbers, the penetration that you get of viewership and people that are seeing your content and your brand, I mean, it's going to show up in revenue. That's just the bottom line of what's going to happen here.
Okay, so an obvious question for you here is we're seeing this 46.3 spot. Where does that fit in terms of like your competitors or the most popular channels in India?
Yeah, the biggest channels in India, the biggest brands, Star and these others, are up in the 100, 120, sometimes even 120 plus range. So these are the biggest channels that exist in all of India. Very, very few channels ever see 46 GRP. Very few. There are 700 or 800 channels in India. I don't know exactly, but I would guess that less than 40 of those have ever seen 46 GRP. And so what's happened is, I mean, Dangal, which is DANGAL, it's one of the success stories and big, just amazing companies, channels and brands that's happened in India over the last couple of years. They're around 70 GRP. I mean, the fact that we've gotten to this level, our expectation, honestly, was we had our fingers crossed. We've been working our butts off, and we were hoping that over a couple of months, we could get up to 20 GRP. That was kind of what we were targeting as our next floor that we wanted to get to and say, can we hang in that area? I mean, again, I can't guarantee. There's volatility all the time in ratings, but the fact of the matter is this is 1 week into this new distribution that we've launched across 50 million households, and it's with no marketing or promotion. This is all organic. It's completely organic growth at this stage. Are we going to follow it with ad spend and marketing spend? Of course. We're laying that out right now. We weren't even planning on rolling stuff out until May. We're accelerating that as we speak because we want to chase this. I mean, now we're in a different mindset. Now we're like 46. Let's go to 70. Why stop now? So we clearly have programming that's striking a nerve. Here's another one that wasn't in the release that came out. There's a metric called time spent viewing.
I was just about to ask that, actually.
We were blowing away the other youth channels and time spent viewing. We were up like at 60 minutes per session. That means somebody goes onto the channel and they stay on your channel for 60 minutes. Why is that important? Because if they're on for 60 minutes, you deliver more ads to that person, you make more money. So TSV is an extremely important metric. In this last week that got measured, and by the way, what got measured always lags by a full week. So we're talking about April, I think 3rd to 10th is what this is for. This rating is for. Our TSV was 113 minutes. Okay, people were going onto the channel and staying for almost 2 hours per session. Okay, we had 75 million households, not people, 75 million households that watched the Q last week, and the average time spent on the channel was 2 hours. It's crazy.
Wow.
That's almost hard to comprehend.
It's all like, it's actually kind of now my skepticism is starting to become that it's too good.
Well, look, I mean, I'll be honest. I mean, look, it's we get these in the middle of the night. We get these numbers. Normally we get them in the middle of the night on what would be my very late Wednesday night, Thursday AM at like 2 a.m., 3 a.m. Eastern time. Okay, that's when the ratings come out, because they come out at between 11 o'clock and noon in India. Normally they come out in India on their Thursday, our Wednesday night, or your Thursday early morning. I wasn't even expecting to put out a release today. I was thinking, okay, maybe we'll get up to 15, 18. I don't know if that's worthy of putting a press release out about, let's see what happens, et cetera. I'm sitting here at 11 o'clock last night in LA, 2 a.m. in the morning your time. And my guy in India calls up, he goes, 46.3. I'm like, come on. He goes, no, I'm not shitting you, 46.3. I go, what? I mean, none of us saw this coming. And the thing is when I say none of us saw it coming, we've spent, untold hours of mining data, programming, setting up the shows, doing the stuff that we think is going to push this kind of thing. But having it rise to these levels and pass what would be known as mass channels, because even when you talk about the youth channels, those still, like MTV isn't a mass channel. A mass channel is what's the biggest channel in Canada?
I actually don't know that. I would just, my guess would be CBC.
Yeah,
it's a network.
Yeah. But what's happening is we're going up now to the biggest networks. Here in the United States, it's NBC, ABC, CBS, and Fox. Those are the big four. Well, if you equated this, what I was talking about a minute ago, the big four might get 100 GRP. Well, shit, we're like halfway there right now, which is just insanity. It's insanity.
Mm-hmm. So did you do anything different between, to go from 13.2 to 46.3 in 1 week? You have more than tripled your ratings. Did you guys get a different channel number?
Yeah. What happened was, we announced this about 3 weeks ago. In April, we went live on 50 million new television households. Okay. We were at that point in about, 45 million, a little more than that, almost 50 million actually. So what happened is we went live on 50 plus additional households on April 1st. We programmed those households were much more oriented into what's called rural India, tier 2 and tier 3 cities, which is kind of like saying, okay, we're going to go now into, Manitoba and Saskatchewan instead of Vancouver, Yeah. That's kind of what you'd almost equate it that way. And so there's a different viewership. Doesn't mean they watch completely everything differently, but there's a different mentality. And so what we've been doing in the month of March, which is why our ratings actually dipped a little bit in March, is we started to test and program stuff to see what was going to resonate with the rural India audience, because it's a bit of a different mindset. And we started to see shows that were really working for rural India. So we started to stack those up into the program thing. And that's what all of a sudden, boom, we went to 13, and then we stacked more of those. And now it's just like, we're just like, wow, okay, what next? Look, I'm a realist. We've got to stabilize. I'm not sitting here and saying we're going to hit, 50 GRP or 60 GRP, or we're going to double next week or whatever. But when you've reached this level, the exposure, and when they stay for 2 hours, that's invaluable new audience reach for us as a channel. So I can pretty much guarantee you one thing: we're not dropping back down to 13.2. That's not going to happen. Just a matter of we don't know. We honestly don't know. I don't know what next week is going to be.
So two things come to mind for me personally. One, your current advertisers have got to be over the moon satisfied, thinking they were getting the distribution they had before, and now it's literally many multiples since a couple months ago. Second, does it kind of become a self-fulfilling prophecy at this point? Like, are you going to be able to go and get further distribution because your rating is now higher, and it literally just bankrolls itself?
Yeah, there's all sorts of things that happen right now, and pretty much all of them are good. The first thing is when we hit 13.2 a week ago, we started to have inbound calls from major brands and agencies that weren't returning our phone calls at 4.4. Okay. So that's already shifted. And you can presume that we've got some big brands that are going to be onboarding onto this channel here before long, because now we're Now we're fully in the game with the big boys. That's number one. Number two is when you deliver this kind of audience, your ad rate goes up automatically. So if we were selling ads for 200 or 300 or 400 rupees per 10 seconds, which is the way it works in India, now we're going to be at 1,000 or 1,200 or 1,500. So every 10-second spot that you do place is a magnitude of, 4 times higher than it was previously. The other thing is that our long-term goal is to build brand identity. It's about building a brand, because brands have intrinsic value in them. Well, when we get this kind of reach and get this kind of viewership, that exercise, look, I was really, in my head, what I was kind of driving towards was, can we get to a solid 25, 30 GRP by the end of 2021? That was really kind of where we were headed a month ago. That's why we did this distribution. That's why we were doing all this, and we're figuring we'll creep up. We'll get up to. That's why with 13 was a shocker last week. Can we get up to 8, and then to 10, and then to 12, and then to 15? Now this thing is rocket shipped, so rapidly that now the issue is, how can we effectively monetize this stuff as fast as humanly possible, and how can we keep giving program that's going to keep taking us further. Put programming in place that's going to take us further.
Well, one other thing that I'd probably add to that I assume makes the business, getting back to what Jordan said about being a self-fulfilling prophecy. If I'm an influencer and you guys approached me before, I might have been like, yeah, whatever, this thing, it's got a little bit of distribution. Now it's like, look at all the distribution I'm getting. So you guys approach SmallCapSteve live. Maybe we could go live in India every day at noon. I don't know, Curt, just throwing the idea out there. But 46.3 million. But that's got to help, right?
Look, this is we've got all sorts of problems we're addressing. I was up till like 4 a.m. My time last night, dealing with advertising stuff and other stuff, marketing stuff, other stuff surrounding this, because we got to move fast. And so the reality is that now we have a whole different set of challenges and issues. They're all higher class challenges and issues. That's the reality. And the thing people have to realize is, like, when we release the next quarter's numbers at the end of May, those are going to be that's for the quarter that ended March 31st. When I talk about this lag, that's for the numbers that we were doing back in Q4 of 2020. That ad revenue basically materializes and comes in Q4. So all this lags by about 90 days. So all the stuff we're going to see this quarter is going to show up next quarter. Now, we expect to have some announcements that are coming, in the not too distant future, that'll be more positive news in terms of things that are driving revenue, because that's what everybody at the end of the day, including myself, is looking for. But I can tell you that this already, I can't talk about it publicly, but I can tell you this already in the last 24 hours has had a significant positive effect on our revenue projections.
Mm-hmm. Well, I like I said, I've been on the bid this morning. I bought a bunch of 33 cents. We're down to 31. But I like I said to Jay earlier this morning, I'm certainly a lot more bullish seeing numbers like these that are, it's demonstrating that as we say in the tech world these days, adoption. People are now hopping onto the platform. They're watching it. So congratulations, Curt. Really, really happy for you, and gonna continue to support this thing.
Let's keep it going. I mean, the final thing I'd say, Steve, is the real dream here has always been to create Q India networks, and you can't think of it necessarily as the perfect classic channel mode. It could be like the channel that we're on right now. But the point is to create a brand that has multiple distribution and various verticals that we do, et cetera. This kind of success right now accelerates that process as well. And that's where you build a brand and you have a multi-channel network. That's where you build a multi-billion-dollar asset.
Yeah. Well, you've turned me into a believer. And really appreciate you hopping on such short notice. And
my pleasure.
We wish you continued success.
Thank you very much, and stay tuned. We're working on it.
Awesome. Thanks, Curt. So that's exciting news there, Jay. This was for when I first saw the bar chart was what got me. When I saw this chart here, I was like,
I knew
wow.
that chart would get you. I know you like to see explosive growth in anything. You're a huge believer in platforms and adoption, and this was right up your alley. So to hear that you were on the bid this morning personally, not the least bit surprised. It's good to see. I mean, Curt has slugged this thing out for a few years, and I mean, I didn't say anything directly to Curt, but it's got to be a great feeling beating out MTV, being that he helped build MTV in the early days, and it's just vindication that he's great at what he does, right?
Yeah, I was skeptical in the early days, and I'm now a believer. So let's get into some of the small cap news that's going on outside of Q. What's caught your eye this morning, Jay? That's got you really.
Actually, small cap wise, there wasn't a whole lot.
Okay, well,
I know I say that quite a bit, but I mean, this morning I struggled. You know me, I like to get out 7 to 10 articles, and I think I got out like 6, and that was that, right? So.
It's okay. So there's a few things I want to get into. One of them is news here that Turkey is banning cryptocurrencies.
Yes, I didn't even know about this until you sent me the title this morning for our show. So let's get into it. I want to hear about this.
Okay, so I'm pulling it up. Here we go, baby. Bitcoin is falling. Blame Turkey. This is from Barron's. Callum Kawan, I believe it's pronounced. The message Max and make sure I'm pronouncing it correctly. My buddy Max over at Barron's. Bitcoin fell early on Friday after Turkey's central bank decided to ban the use of cryptocurrencies for payments from the end of the month. The central bank of the Republic of Turkey cited a number of reasons for the ban, including a lack of supervision mechanisms and central authority regulation for crypto assets. It said that market values can be excessively volatile, adding that digital wallets can be stolen or used unlawfully, and that transactions were irrevocable. The benchmark cryptocurrency slipped 4.8% to 60. I think they're referring to Bitcoin here, which apparently Bitcoin's now referred to as the benchmark currency.
Cryptocurrency. It always was. Let's face it.
Yeah. I wouldn't normally say Bitcoin, but we all know what they're talking about. After reaching all-time highs above $64,000 earlier this week, ahead of crypto exchange platform Coinbase's initial public offering, Ether, the world's second most prominent crypto, also fell around 5.2%. Payment service providers cannot develop business models in a way that crypto assets are used directly or indirectly in the provision of payment services and electronic money issuance, and cannot provide any services related to such business models according to the new regulation. Jay, what are your thoughts?
What are my thoughts? First and foremost,
hot take, baby.
A hot take. I don't know that I got a hot take. But, well, I guess here's your hot take. Turkey's fiat currency has been struggling for the last year and a bit, and they're doing all that they can to prevent it. Last year, with I think it was Trump put in some regulations, there was literally videos of Turkish citizens burning US dollars as a way to say screw you to the US. Now, not realizing that by destroying currency, you're actually making that currency more valuable against your own dollar. But the central bank there has been doing all that they can to stop this thing from falling. They're looking for any way to stop money from flowing out. Crypto is notorious for being a method of getting money out of an economy that's unstable, right? I mean, earlier I think it was like 2 months ago, they fired their central bank planner after he made some policy change that was unavoidable. I know Hermina wrote up. I'll see if I can pull it up. Turkey's in trouble financially, and I think they're doing all that they can to prevent outflows.
Here's your most recent chart on Bitcoin. Trading View. I have switched to actual charting software. To anyone who has been taking shots at me for pulling up CEO.ca previously, when I was looking for charts, we could see it's come back a little bit from 65,000. The one thing that I'm going to add that I actually think is a thing, and we've talked about this a little bit in the past, when it came to, let's say we're talking about the Canadian cannabis bubble, right? Something that a lot of people they used to comment on is When you look back at the Canadian cannabis bubble, what was the height of it? When did we top out? When did we peak?
Day before legalization.
And that was the most obvious thing for anybody to say. You want to buy up until legalization, and then you want to get the heck out. And that's exactly what happened. And now I kind of wonder, like, is Coinbase, is that moment, the legalization moment for Bitcoin, where now it's going to be, I'm not saying Bitcoin's going to go back to like $10,000 or anything, but there are logical reasons to think that this is going to actually be a tremendous headwind for cryptocurrencies, because now you got all the cryptocurrency believers that have a whole new thing to sink capital into to hold the price of up, which is Coinbase. So yes, in some ways it's made it so that people who previously weren't interested in investing in Bitcoin now have a new mechanism, something that cash flows. But on the other hand, there's only so much demand capital for cryptocurrencies, and we just took something public at approximately $100 billion valuation that's going to suck up a lot of capital. Your thoughts?
I never thought of it in that frame of reference until you said it right now. And truthfully, I don't think you're off base with it. I think you put forward a very solid argument. Coinbase going public is vindication that the currency is legitimate because, they're an exchange, obviously, right? So it very well could be the major sell the news event that's going to change sentiment for a little bit here, right? There was a lot of funds. Consider this. Pension funds want access to exposure to cryptocurrency. Well, now they have that by just investing in Coinbase rather than trying to put together ventures or whatever instruments they need to be able to buy the currency directly. But now they can gain exposure just through Coinbase. So, it very well could be a near-term bearish event that hindsight's 2020, of course, but it's a very solid argument, I would say.
The other thing that I found kind of interesting in this whole little thing, and here's the chart for Coinbase, which started off over $400. It seems to have settled in around that $330 range. But I think it was really good for gold. Let's pull up the chart of gold here. I like this charting stuff. It's funny that it took me 20 years to get into this.
It's funny because go ahead.
As somebody who's been trading stocks since I was 18 and could legally set up an account, I'm now 38. I've just always I've never been a huge chart guy, but it's kind of nice. I could see my buddy JTD, who we have no idea who is, by the way, but he always participates and we appreciate that. He's a fellow Jays fan, which was crushing for me last night, watching them almost come back from a 7-0 deficit, came all the way back and had the go ahead run at the plate in the ninth and couldn't pull it off. But we can see gold here. It's started to actually rally. 17. It was at like 1700, and it's now kind of like been shooting out of the gate here since Coinbase went public. I think that's really interesting. I do, and I wonder if for crypto, at least this leg of crypto, if this was a bit of a watershed moment where gold now, who knows, I don't understand why gold's as cheap as it is. I think that everything that's going on has to be very scary if you're a central bank. And I would be looking to add the precious metal if I were a central bank. And I wonder if at some point fund managers start to feel the same way. But I will say this. I want to say it was Jim Cramer 2 days ago. Somebody called him and they asked his thoughts on gold. He said, I used to be a 10% gold guy. Now I'm a 5% gold, 5% crypto guy, which is that's kind of a new narrative that we're not used to hearing. So we'll see. The sentiment's not been the greatest for gold. It's been really strong for crypto. But the problem is, as we know, as guys who follow micro caps, and we see it all the time in the stocks we own, the higher the valuation gets, the harder it is for everybody to push it up. So let's see what happens now that we got $100 billion crypto specific issuer public, and the market cap of Bitcoin continues to run.
Yeah. On the topic of gold and precious metals, or even mining in general, last year was a very great year for them. Even still, the year-over-year returns that mining firms are posting in with respect to what they got a year ago for every ounce of gold is still great. I can't remember which company it was that filed this morning. Last year they averaged $15.88 dollars per ounce, and now they're at like $17.70. So I mean, $200 doesn't sound like much to some people, but I mean, when you're pulling 100,000 ounces out of the ground per quarter, that's $200 extra in your pocket. Your all-in cost of mining that isn't really changing. So I mean, it's effectively a free $200 per ounce, and I mean, there's just getting no love. I mean, yesterday, Steve, I pointed out to you, I think it's Exelon Mining, Exelon Resources, ticker symbol EXN. They've got a market cap of like 120 million, and they're actually in production, making like $50 million a year in gold sales. Like, to me, that's just wild. Now, I haven't looked at their balance sheet or anything else, but high level, those numbers just seem ridiculous.
Is this the chart here?
Yeah, I covered it yesterday.
According to TradingView, the market cap's at $117 million, and you're saying they're doing how much production of silver?
1 second. So yesterday, Exelon Resources reports production of 516,715 silver equivalent ounces in Q1.
So what does that amount? So what does that amount to? Like if they're doing say $10 in gross profit, that means that they're doing about $5 million gross profit in the quarter. Would that be?
So what's silver at right now? 1 second here. Silver is at 26.10. Let's call it 25, just for the sake of simplicity. Every quarter, that's just under. It's $12.9 million if they were to sell that every quarter. So on a yearly basis, that's $51.5 million in potential revenues. I mean, there's just no multiple being applied here, it seems. And I mean, I'll be honest, I know nothing about the company in terms of its balance sheet. Not a client by any stretch. I follow them just slightly. It's just, to me, it's just an example of the precious metals market as a whole.
Yeah, okay, but that works out to let's just say that they end up, after they fully mine it all in, they're making $10. I'm just pulling that number because it's easy to work with on 500,000 ounces. That's $5 million US per quarter, right? So they're doing a $20 million per quarter run rate. If that amounts to anything that looks like pre-tax cash flow, that I'm just doing back of the napkin math live on air here. But that puts us somewhere in the ballpark of trading at 5 to 6 times pre-cash flow earnings. Like, you're right, that's really cheap. That's really cheap.
Right. I mean, like I said, for all I know, they got $1 billion of debt. I don't know. I haven't pulled it up. I'm not going to bother pulling it up because I'm just using it as an example. But to me, it's just an example of how the precious metal sector as a whole is just beaten down.
Okay, so let's move on next here. I want to talk about this company that went public yesterday. We didn't cover. We didn't have a lot of time.
I missed this. Yeah.
We should have done a video on this one and covered this. Tesla self-driving truck rival TuSimple raises $1 billion in IPO, valuing it at $8.5 billion. So the stock didn't do too well out of the gate. TuSimple has raised $1 billion in an IPO after the autonomous trucking rival to Tesla and Google priced shares above its range ahead of the group's market debut on the NASDAQ on Thursday. Almost 34 million shares were sold for $40 each, giving the San Diego, California-based company a market value of $8.5 billion based on the details of outstanding stock in its filings. The company sold 27 million shares, while a selling shareholder sold 6.7 million shares, TuSimple said. So I guess one of the shareholders used this IPO as an opportunity to exit.
Why else would you IPO in the electric vehicle category?
Interesting here. TuSimple has strong ties to electric vehicle leader Volkswagen through a partnership with its trucking subsidiary Traton, as well as Navistar, which also owns more than 6% of the Class A shares. Traton, or I don't know if I'm saying it right, Traton, whatever it's called, is in the process of buying the remainder of Navistar that it didn't already own, and will launch a global business with TuSimple in Europe. So they do have some credible partners. Let's give them credit for that.
So they're buying Navistar?
Not TuSimple, but TuSimple has a partnership with a subsidiary of Volkswagen, which is called Traton, who's in the process of buying Navistar. So effectively, Volkswagen's going to own Navistar. Is how I'm reading.
Oh, okay. Sorry. I misheard you there. Yeah, looking at their website, they seem to have partnerships with some decent names that I know in the space. Werner Enterprises, Goodyear, CN, Navistar, like you said, Traton, like you said, or Traton. They also list U.S. Express, Penske, which is a trucking firm, UPS. Like there's some notable names on here. Now, Union Pacific is another. I don't know the direct relation. Seems good. My question is, what stage are they in the development game?
Well, Jason, I pulled up the S1 here from Edgar, your old pal Edgar, and let's take a look here at what the income statement and balance sheet look like here. I had it up earlier. This is again compelling television. So they did do 1.8 million in revenue in 2020 for a company that's being valued at $8 billion.
I can't see why they would have sold some of their shares.
Usually total assets on the pro forma basis. I guess that this is they raised more in the IPO than their entire balance sheet's worth, if I'm understanding this correctly. They went into this thing with $346 billion on their balance sheet post-transaction, I guess 586. Which I'm not sure who they're acquiring here. I haven't spent a lot of time on this, but it's interesting to see. Like, to me, this is why, and people call me a boomer for this, but this is why I like General Motors. I mean, what's General Motors trading at? Let me pull it up.
While you pull that up, I'm just going to give the high-level overview here. In July of 2020, TuSimple launched the world's first autonomous freight network, a nationwide transportation network allowing freight to be moved throughout the country using Level 4 autonomous trucks. Through TuSimple's groundbreaking network, we are addressing the truck freight industry's most pressing challenges by enabling reliable, low-cost freight capacity as a service while setting a new standard for safety and fuel efficiency. My main question here is, where is their tech at? Their website's showing a bunch of international trucks, so that tells me that it might just be an add-on to current vehicles, and I don't know that they're producing their own. So there's no corporate presentation on this thing, so I don't know what they actually have.
Yeah. Well, I'm sure that we could make some calls and get access to it, or might even be able to find it online somewhere. But I just like why do I own this this company that trades at this high valuation? Okay, sure, they got a great partnership, but when I can own actual look, I know I'm a broken record about GM, but they've kind of been in this car business for a while. And they're going to be launching out a ton of EVs. They're going to be putting in trucks through, I believe, I forget the name of the brand that they're going to be doing it through. But Cruise Automation yesterday got valued at $30 billion with a significant investment from Walmart. And here GM's sitting at what, like a $60 billion market cap, $90 billion market cap. Sorry, 84 billion. And, they've got the distribution. They've got all the right subsidiaries popping up, and they're inarguably number one or two in the autonomous driving game, along with Google's Waymo. So this is the name that I kind of like. I understand that there's some issues there when you're dealing with a company that's got a lot of employees and pension liability to deal with, but I certainly like this name a heck of a lot more than I like a startup that just goes public, that has no revenue, has no track record, and is trading at $8 billion. I like to view things from a risk reward standpoint, and I don't really understand why anybody would be look, I do understand. Let's get real here. Everybody looks at Tesla and they go, oh, is this the next Tesla? And it's the same stuff that happens, in Canada. We had Compass Pathways go public, then a whole bunch of bad actor psychedelic deals went public where they had no intentions of doing anything real. And sure enough, a lot of them caught some bid because people said, okay, I'd rather gamble on one of these early stage startups where I'm paying, 1/100th the valuation than invest in the real company that's actually made real progress in the space. So that kind of makes you go, okay, here's your shot with the TuSimple. There's a whole bunch of other names out there. But let's keep an eye on this name, because I think that that all of these EV names are going to bring us great storylines to follow moving forward.
Absolutely. My quick 30-second research actually says that it is just like an add-on to any heavy truck out there right now. So it's kind of interesting in that sense, because if you can retrofit existing vehicles, I feel like it'd be a much more cost-effective solution and might be more susceptible to being accepted by large corporations.
Oh, good point. Interesting. Okay, let's go with the next story here. This was on the deep dive this morning.
What you got?
Vireo Health. They saw Bruce Linton dropped his ownership to 8.5%. Does he still have to file on SEDI? I don't think, or is it 2 months that he doesn't have to? So I don't think you have to. Once you break the 10%, I think that you reach a point where if you're no longer a director or C-level management, you can effectively stop reporting your insider sales. Or do you think Bruce might just be reporting these as an FU to Vireo?
I've been told by both sides that it was an amicable divorce. We'll leave that at that. I mean, Bruce has been kind enough to come on here a couple times, so I'm not going to destroy him by any sense. I mean, as far as the 10% goes, I think you're correct. I don't know that he needs to keep reporting at all. Like you said, he's not executive chairman or anything. There might be a lag time behind it. I don't know. The last time he reported sales was in December, so regardless, he might be fine.
I think it's 30 or 60 days. I've looked this up in the past in the TSP
It's
manual.
Canada. It doesn't really matter. It sounds bad, but honestly, notably, most of the time when you see people drop below 10%, they will include text within the early warning report or the related press release that they no longer are a reporting issue, or they no longer have to report for this issue. Sorry. That was not included in this text, so I found that interesting. However, he is all out of warrants now. He's just holding common shares. He's got 6.4 million, and personally, I don't think he really has to report anymore. And I did include that in there, that I don't believe he needs to report anymore. Mm-hmm. But I did notice that there were some people mad that he was selling, and I'm like, guys, like, the thing with capital markets is people don't seem to understand that sometimes you sell because you're just not interested in the story anymore. It might not say anything about the long-term outlook for the company or anything else. It's sometimes you got better places to place your money. This morning I didn't cover it, but he was also Linton was named the chairman of the advisory board for Above Foods, which is actually a Regina, Saskatchewan-based company, which is my hometown. And I'll be honest, I had never heard of them prior to them going public, which is weird for a town of 200-some-thousand people. But yeah, he's chairman on that. So, I mean, I would likely guess that he's reallocating to capital to names he's actually involved in now. Right? It doesn't make sense to not keep, or it doesn't make sense to keep money in a name that you aren't involved in when you're someone like Bruce Linton.
Mm-hmm. I like Vireo. I think the Vireo is a good name. If you're looking for if you're looking for an interesting sort of smaller or mid cap MSO, Vireo is a nice second or third tier name, in my opinion. But how you want to put your tiers?
Yeah, I view them as a great takeout target. Kyle Kingsley has been on the show before. I think he's great. They're in a few different states compared to most. They're what, Massachusetts? Is that where they're centered? But yeah, I truly think if someone's looking to continue to grow their one, their investor base, and two, their states where they have footprints. It's probably a great target in that sense. Not investment advice. That's just personal opinion. But yeah.
Mm-hmm. We're getting chirped by somebody named MY in the comments, and he says, "Is this about crypto or not?" Apologies, MY. We already covered the Turkey ban on crypto earlier, so you can catch that after. But I appreciate you joining us and commenting. We're primarily small caps on this show, but we
can't ignore crypto.
We can't ignore it. We can't ignore crypto.
Yeah, that's just is what it is.
Okay, let's get into one more story today. So I got Charlotte's Web. They filed a $350 million base shelf prospectus.
We could cover Charlotte's, but let's cover Hexo instead, because last night they filed a base shelf as well. And the reason I say that is Charlotte's Web may have done the same thing. I don't know what Charlotte's Web is valued at, but Hexo last night filed a $1.2 billion prospectus, which is Hexo being Hexo. Notoriously, their CEO, Sebastian St. Louis, put out a book called $1 Billion Startup. And by the time it was released, his company wasn't even worth $1 billion, which is just simply hilarious. But the company's only valued at $875 million as of yesterday when they put that story together. So they're trying to raise a significant multiple over what they're valued at already. I mean, for those of you wondering what it means there's probably dilution coming. Well, and we know there's dilution as far as the Zenbis deal goes.
What's the valuation on Hexo sitting at currently? Is it at?
It was like 875, 872 yesterday.
Look at this. Your Canadian cannabis stocks. Hexo.
Oh, you got your list all set up and everything.
I've been working it, man. I've been working the trade gate, baby.
Oh, GTech at 78 cents. That's a name I won't understand why it's valued so high for the revenues it does. But when you've got a name like Hexo putting out a $1.2 billion shelf while valued at 873 million, it's all the same. Apparently, I'm responding somewhere. Our producer must be working behind the scenes in the comments. But yeah, we'll see what Hexo actually raises.
I don't know what to tell you guys. Of the Canadian cannabis companies, I have this conversation probably 2 or 3 times a week. I don't see why anybody would want to own Hexo here. I don't see why anybody wants to own Afria. I don't see why anybody wants to own Canopy. I don't see why anybody wants to own Tilray. You guys are catching
Let's talk
theme
Tilray
here
for a second. I missed it this morning because I was on conference calls already by the time it came out. However, they have changed some resolutions as of this morning. What it looks like is they're looking to do all that they can to make this deal with Afria close. I believe they actually reduced the amount of shareholders that have to approve the deal now in order for it to proceed. Michael Miller had sent it over. 1 second here.
Okay.
I'll get you this link. There you go, good buddy. They lowered the minimum quorum requirement is what it is.
Okay, let me pull this up here. Tilray board directors announce approval of amendment to company's bylaws. Afria and Tilray will announce waiver of charter amendment requirements. So let me click on the article here, see what we got. So
this is one of the most legalese news releases I've seen, for the record. Go ahead.
Okay, I'll read it for you. Tilray board of directors announces approval of amendment to company's bylaws. Afria and Tilray announce waiver of charter amendment proposal requirement. A global pioneer in cannabis research, cultivation, production, and distribution today announced that the Tilray board of directors approved an amendment to the company's bylaws to reduce the quorum requirement for shareholder meetings from shareholders representing a majority of the voting power of the outstanding shares entitled to vote to 1/3 of the voting power of the outstanding shares entitled to vote. Okay, so I don't understand what I'm reading, if I'm being honest with you.
I know, that's why I had you read it.
I have no idea what I'm reading.
Basically, they're changing bylaws by the looks of it to do all that they can to get this transaction to go through. Notably, they were originally supposed to have their meeting today. They postponed it at the last minute yesterday to the 30th, because they don't have the support for the approval. For whatever reason, it seems like there's less interest on that side for the deal to go through, and people are scrambling. And I mean, this here now it effectively says they are scrambling. So they reduced the quorum requirement for shareholder meetings from shareholders representing a majority of the voting power of the outstanding shares entitled to vote. So they're saying less votes have to be there and approve of it to effectively constitute the majority of shareholders approving the transaction.
So I'm sure that there's a bunch of people on the phone last night screaming at each other.
Exactly. It's not article worthy because it's so much legalese behind it, but it's still worth commenting that there's clearly scrambling.
Mm-hmm. Yeah.
But
okay, well, look, let's wrap it up here. We've been getting chirped in the comments by MY telling us that nobody cares about our show if we're just talking about stupid stock market. I love you too, MY. Thank you for joining us, and I appreciate your attention. And I hope you continue to join our show to hear us talk about the stock market.
We'll be back Monday at noon Eastern.
Well, Monday at noon with more stock market talk. Okay, so anything exciting this weekend? Anything going on at the dive this afternoon?
This afternoon we have. I'm going to butcher this name, and I apologize in advance. Rahul Paul, is that correct? Is that how it's said? Yep. Rahul Paul. Yep. He is the president of Radisson Mining. He comes on to talk about the changing sentiment in gold as a whole, as well as how you value projects and his take on acquisitions from the majors. So on top of that, we've got a full weekend of earnings previews from young Justin. I've got 3 or 4 articles from Jim McFadden going out. And we should have our week ahead out Sunday morning from Hermina.
Okay. Well, you got any big weekend plans? You know, you gonna go out to the cottage? What's Jay got on tap for the weekend?
You touched a very sensitive topic. As of, I think it's Wednesday, we are in full lockdown in Saskatchewan, and it's restricted to households only. What that means is I can't go to the cabin because technically the cabin is in my father's name, even though it's effectively the family cabin. So, yeah, I'm stuck at home packing for my move in 2 weeks instead, which is always fun.
Well, it sounds like you've got a exciting weekend ahead there, Jason.
I'm going to make a request. Change the music to your opener today. I love that music because it was so bad. It was great.
Okay. You got it.
I was going to comment, but you got right in with Curt there. That wasn't going to.
This is some beach music.
It's Friday.
Beach music. It's Friday. It's I live next to the lake. I can go to the beach. I don't know, like legally, if I'm allowed to or anything, because Ontario's pretty freaked out about this coronavirus thing. If you haven't heard of it,
I think the lockdowns are getting worse today, actually, too.
I don't even pay attention. All I know is I live in my little bubble here in the suburbs. Life's changed a lot for me. I spent the earlier part of coronavirus in an apartment in the city. Now I'm a suburban boy. Look, guys, nothing we talk about on the show is intended to be financial advice. It's informational, entertainment purposes only. Information purposes only. You're looking for that sort of thing, go find somebody who's licensed, not somebody like myself or somebody like this ding-dong over here. You guys could have spent your last hour staring at any screen, any place in the world, including our newfound friend, MY, who likes to tell me that us doing this show is the equivalent of us just talking into a mirror. Perhaps that's true, MY, but you know what? I appreciate you. And I hope you'll join us on Monday at noon. Who knows? We might bring young Justin on. He loves stock market talk. Be ready for that. Thanks, everybody. Have a great weekend.